How much are interest rates affecting your monthly mortgage rate? Here's some examples I'm going to show you right now, hard numbers. Purchase price, $500,000. If you're going to do a 20% down loan, you'll have no mortgage insurance. Your loan amount would be $400,000. With this being at January's rates at 3.10 was the mortgage rate back in January. Your monthly mortgage payment would be $1,708. And just want to show you that $400,000 loan, 30-year fixed, 3.1% equals $1,708. So that would be your monthly mortgage payment back in January if you were to purchase back then. If you were to purchase back just on November 10th, interest rates got all the way up to 7.08%, which nobody thought would happen. I think the most interest rates had shot up was like 2.75 points in a year. And here you go at over just about 4 points. It's went up so far this year. So if we do this, a $400,000 loan, 20% down at 7.08%, and it's going to type this in, 0.08 equals $2,683 is your monthly payment. And that is your monthly payment, yeah. So then same thing, November 16th here just yesterday, interest rates shot down a little bit, which was nice, a half a point. So now your monthly payment on this half point dropped a little bit over $100 a month. Now, a lot of people are doing 10% down. You don't have to do 20% down to do loans nowadays. So if you're to do just 10% down, your monthly payment would have been $1,922 on a $500,000 property that you would be financing $450,000. Everyone would be doing cartwheels right now if that was your monthly payment on a $500,000 property. And if you're just to do 5% down, which you're allowed to do that also, you would have mortgage insurance on these two, your monthly payment would be $2,028. This was back in January. Now, fast forward to November, we're up 4 points, and your interest rate, if you were to go at 10%, would jump all the way up to $3,018. So it's not quite doubled like a lot of people think, but it's went up significantly since January of just this year. And this is the issue of affordability that everyone's having. Yeah, did prices go up? Yeah, they did, but the interest rate is what is crushing the housing market right now. Transactions are down roughly 28%. And then if you're to do 5% down, $3,186 would be your monthly payment. Now here in the past week, we've gotten a nice little breather, went down a half a point. It's tied with the 10-year treasury, and that's been a nice little breather, like I said. So you'd be at $2,877 on 10% down. Or if you did 5% down, you'd be at $3,037 a month. Now let's break this down here. An example, I did 10% because that's kind of what the average, what people are kind of putting down here if they're not paying cash. So we will do a 10% down example just to show you how much this has changed. So from January to November 10th, that change on the 10% model is $1,096 a month. Your payment has went up doing nothing, just went up that much because of interest rates. That is $13,152 difference a year. That's the issue right now, is affordability, like I said before. If we would just go here in the past week, how much we've actually went down, a half a point, that'd be $141 a month you'd be saving, or $1,692 a year. And then if we were to go for this final example, some people think interest rates could possibly go to 10% in 2023. I didn't think we'd go above 5.5 this year, and here we are sitting close to 6.61 now. But who knows? Maybe some of these crazy people might be onto something. I don't know. But if that were the case, look how much these interest mortgage payments are monthly. $4,168 if you did 5% down, $39.49 if you did 10% down, or if you did the conventional 20% down, you'd be at $3,510 a month. So just from now, November 16th, when we're here at 6.61%, If you did those numbers, that is $1,000 and $7,072 a month jump, or another $12,864 for the year. So you kind of add almost, you almost could add these. It's pretty close. You can't add both, but it'd be pretty close to $25,000 a year in the past 2 years if we do somehow hit this magical 10% number that a couple of forecasters are calling for. There are ways around this right now, kind of, I'll talk about in my next video, which is a 2-1 buy down. Basically what it's talking about is the first year you can get your interest rate bought down 2 points, and the second year 1 point. So for this example, right now, November 16th, your first month or your first year interest payment would be, mortgage payment would be 4.61 instead of 6.61. Year 2 would be 5.61, then year 3 would be 6.61. But just want to talk interest rates. Yes, transactions are down right now, 28% here in Hillsborough, Pinellas County. Throughout the country, everyone is feeling this right now. Some places in the country are going to hit a lot harder with this, and prices are going to definitely go down a lot. Other places aren't going to feel it as much, but here's just an example of interest rates, how much it is affecting the housing market. It's not this time right now that we're in. It's not like back in 2007-8 where housing caused this issue. Right now, the Fed hiking the interest rates up is what's causing this issue. By, you can see the interest rate. And people say, oh, well, COVID started this. No, before COVID, we were actually on a nice run up in real estate. And yeah, affordability is just getting crushed right now by interest rates. So if you're thinking about buying, stay tuned to my next video about the 2-1 buy down. That's something that could help you out to get by this tougher time right now, and help get you in a place if you need to be in a house or a property right now, or if you're tired of paying rent and everything. So Joshua Neitz, thank you for watching this video. Stay tuned. I have 3 videos kind of talking about interest rates and 2-1 buy downs, or if you're to wait out a year or 2 years just to see these different calculations. So stay tuned, subscribe, like this video if you like it, and also watch the next video, number 2, coming up here in a second. Thank you.